But let's shift focus then, and there's lots that is happening on the global front, especially when it comes to energy markets. And to discuss that in greater detail, we are now joined by Mr. Bharat Subramanian, Senior Analyst Energy at BofA Securities, who is now joining us. Mr. Subramanian, afternoon. Thank you so much for joining us from the sidelines of BofA conference. And I know you track metals as well. We'll come to that in just a bit. But before that, we have to talk about crude oil prices. Given everything that is happening on the West Asia front, where do you see crude oil prices headed in both the situations, both the extreme situations that we will talk about? One, assuming that the war ends today, and second, if the war goes on for the rest of this calendar year. In both these situations, where do you see oil prices headed?
Yeah, first of all, thank you very much for having me. Look, a lot of, I think, what happens to crude, as you rightly mentioned, is predicated on the geopolitical tensions. Difficult to really put a number to it, but of course, if the tensions continue, we are very likely to see crude prices rally further from here on. And in the eventuality that a truce is reached, of course, prices could come off, but very difficult to actually put a number in this case.
Right. Given that the situation is very evolving, I understand it is difficult to put a number in this case. But in your view, what crude oil price level will start hurting India's economy meaningfully? And what is the worst case impact that you are assessing at this point in time on the Indian economy?
Look, I can't really comment on the Indian economy, but within the oil and gas sector that I cover, the energy sector that I cover, the broader energy sector, look, higher crude prices would obviously benefit the upstream exploration and production companies, given higher oil and gas realizations, and negatively impact the oil marketing companies. I think a couple of key factors to kind of watch out for, especially for the downstream players, is number one, crude prices. As you know, this adversely hurts both petrol as well as diesel marketing margins. The other key metric to kind of track also is the LPG marketing margins for the oil marketing companies. Here again, while it's a subsidized product, the oil marketing companies are facing losses north of 650 rupees per cylinder in the month of May. So these two are definitely hurting the overall profitability of the oil marketing companies. There have been certain offsets that we've seen beginning of March. Obviously, we saw excise duty cuts for petrol and diesel. And more recently, we've seen auto fuel price hikes, which have helped margins to some extent. But higher crude prices and currency depreciation, I'd say these are the two key points to watch out for.
Clearly, several factors which continue to weigh heavy on the oil and gas and the energy sector globally. But since we're talking about oil marketing companies and the fourth quarter earnings season has just ended, given everything that is happening, one, crude oil prices, second, fuel price hikes that we have taken back home in India, your view on the entire oil marketing company sector? I understand you can't talk stock specific, but your general view on the entire sector, whether it is oil marketing companies or oil exploration companies.
Yeah, so look, as far as the oil marketing companies are concerned, as I said, higher crude prices, INR depreciation, negative for marketing margins. So we actually prefer companies that have a lower net marketing sales to refining throughput ratio. With respect to the upstream exploration production companies, look, this is where we are a little more positive on. Of course, higher crude prices and by association, higher gas prices obviously helps overall realizations for these companies. Another key theme that we actually see developing here is on energy security. And as part of this, there's quite a lot of focus on deep water and ultra deep water exploration in the country as well. Here, again, last year we saw the ORD Act amendment passed by the government, which has created some regulatory stability. And this could essentially help get in the global majors to come and invest in India as well, as far as these deep water fields are concerned. While we think that the domestic players will continue to remain anchor investors, it would be great, obviously, to have some of the global majors who have decades of experience in these deep water exploration coming and investing in India as well. So net-net, in the absence of a windfall cess or a special addition excise duty on production of crude or new well gas, we do actually see the upstream exploration production companies definitely benefiting here.
Okay, upstream exploration production companies are likely to benefit. One last question on oil and gas before we move on to metals. Do you think that the market is probably underestimating the risk of windfall tax on upstream companies given the profitability that they are enjoying as a result of surge in global crude oil prices?
Look, what I'd say is obviously last time around, we did see windfall cess cap realizations for these companies at $75 per barrel. It is a key risk. I think we've been flagging this as a key risk as well for the companies. But I think it's a well understood risk as well by the market. Remains to be seen. Obviously, it's a government decision. It remains to be seen whether it's imposed or not at this point in time.
All right, let's also shift focus to metals and mining, another sector that you track. Given everything that is happening, we have seen surge in aluminium prices, which are trading at 4-year high levels. Where do you think we are in the global commodity cycle? Do you think we are at the start of a new commodity upcycle, perhaps?
Yeah, look, as far as aluminium is concerned, our global commodities team is actually pretty bullish on aluminium, where prices could potentially peak the second quarter of next calendar year. Here, I think the positive factors contributing to higher prices is largely due to supply discipline. We've seen China obviously adhering to a 45 million ton smelting capacity cap, as well as newer production coming from areas like Indonesia taking more time to come online than that was earlier expected. Another key factor is obviously the political wars that we're kind of seeing right now. The Middle East, as you already know, has about 9% of the global aluminium supply, part of which obviously remains affected because of the Middle Eastern war that we're really seeing right now. So for us, our bullish view on aluminium is more predicated on supply side issues. And as I said, we expect prices to rally from here, but probably peak in the second quarter of next calendar year.
Okay, aluminium prices could peak out in the second quarter of this calendar year, and you're penciling in this bullishness on the back of supply side concerns. But other than aluminium, any other commodity, any other industrial metal that you're bullish on? We'll talk about precious metals. This is from the industrial metal perspective. Any other metal that you're bullish on?
Yeah, look, so in fact, our global commodities team, we're far more bullish as far as aluminium is concerned. I'd say we're a little more neutral on zinc. And overall, in the sector within India, we actually prefer the non-ferrous metal space over the ferrous, that is iron ore and steel. So essentially, we are far more bullish relatively, I'd say, on aluminium rather than on the ferrous space.
Far more bullish on aluminium than on ferrous space. That's the word coming in. And let's also talk about precious metals. If you track that space very closely, do you think the outperformance in gold and silver is likely to continue this calendar year as well?
Yeah, look, I think our house forecast for silver is around current levels of about $75 to $80 per troy ounce. But essentially, we don't really track gold as much because we don't have as many listed pure play gold companies in the country in India today.
And how important do you think Chinese demand recovery will be for global commodity market to continue its uptrend in this and the next calendar year, perhaps?
Sorry, could you repeat the question? I didn't quite follow that.
Yes, so the question was on China. How crucial is demand recovery in China expected to be for global market, global commodity market to continue its uptrend?
Yeah, I think, look, as far as commodities is concerned in general, I think China accounts for over 50% of the global demand, right? So what happens in China, as you rightly pointed out, is extremely crucial for across commodities, I'd say. So definitely something to watch out for from a demand perspective. An increase in demand essentially will be supportive for prices.
Clearly, China being the biggest consumer and producer of most commodities, everything that happens in China is very crucial for global commodity market. Mr. Subramanian, thank you so much for taking your time out and joining us here on ET Now from the sidelines of the conference. But on that note, we need to slip into a very short break. More news and updates will continue on the other side.